Sasha, the market will be drastically different from November market will be drastically different from the October market. October was more about FI selling and earnings disappointment. November could be very different. It would be a lot about global cues. It certainly would be about US elections and the outcome for next few days, followed with China, and then how essentially the global risk on trade would move. So if October was about local October markets, global markets by and large did very well for themselves. What bothered us was local issues like earnings disappointment and FI selling. November, it would be a very different context. The outcome of US elections, the initial set of announcements which would come, whether it's Republicans or whether it is Democrats, China's stimulus, how keen are they really to keep on stimulating the economy and what kind of implications it would have. Frankly, that in a sense will set the tone for next few days, because that would be the more material news driven aspect for the market. So from a market standpoint, up until now, we've been very reassured that at least one part of the market, which is the global part of the market, was not breaking down, was not volatile. But November could be a completely different kettle of fish.
Yeah, absolutely. Lots on our plate, be it from US, be it from China. In the meantime, of course, the 10-year yield has now recovered and it's back at that 4.3% mark. It's now nearing a 4-month high. Oil prices, got to keep a close lookout on that as well. They've risen by about over 1%, or rather $1 to a barrel on OPEC, as well as the output hike delay. You've got easing West Asia concerns, which can cap oil prices gains. Brent is currently hovering around that $74 to a barrel mark, and WTI nearabouts that $71 per barrel. So that's really pretty much it. But yeah, it's the US election week, and of course our markets as well. Truncated week as it may be, but you did have both the FIIs as well as DIIs selling on Muhurat Day, token as it may be and a minuscule figure, but yeah.
Yes, indeed, we did. And if we were to just map ourselves compared to the rest of the globe, yes, we did outperform. You did see the major indices in the US as well as in Asia see cuts, and we gained about 0.5%. So yes, in comparison to that, there was that slight degree of outperformance that was evident as we gained 0.5%. The small cap end of the market, interesting there, because that was your winner, and you did see that strong outperformance within the broader markets. PSU banks made a comeback, so it's been the best week in the last 1 year. You also had the metals, which have been on that 3-week losing trajectory that finally put the brakes on that loss. The IT index has declined for the 3rd straight week though, so that continues to remain a little bit of a dampener. And in terms of the market cap of the 6 among the top 10 firms, that has managed to jump by about 1 lakh crores. And you've seen the FPI withdrawal, Nikunj, as we've been talking about, that continues to be maintained, a record 94,000 crore rupees from India in the month of October.
See, Avan, why are FI selling? Is it China? Is it earning disappointment? Or is it both? The answer to that is very difficult to quantify. But I don't think the FI selling is going to reverse in a hurry, because that is the way how the global setup clearly seems to be, where everyone is really excited about this China comeback trade. So that China comeback trade is a real trade. Chinese markets have started outperforming, and that is something which in a sense will continue to bother the markets on the margin. Now, if I just look at last week's market setup, the excruciating selling in mid and small cap stocks, that seems to be settling down, but there is no way you can quantify that. You may not revisit that ugly selling scenario once again. For me, what really matters is that you got to ask yourself and say that, okay, what is the upside from here, and how much of the bad news in the price, which is that how much of this earnings slowdown shocker is something what markets are already factoring in. My sense is that if globally nothing goes very wrong for the global financial market setup, then Indian markets will gradually start making a base. On the margin, I expect data now to improve, whether it is on the earnings front, whether it is on the demand front, or whether it is from management commentary. I expect that the cyclical factors which in a sense hit the earnings, whether it was slowdown in government or what happened because of monsoon, or what was the impact of essentially the government government impact in terms of the economy and slowdown, those factors will start getting arrested. So if globally things don't shake rather violently or wildly in this week, then you want to be a buyer in select stock at lower levels. I think lot of adjustment in the earnings season is behind us. If FI selling reduces, then I think you can make a case that we could be in for a stable stable year-end kind of a move. But a lot hinges on this week's market volatility in the global markets, because the setup for India has been locally bad news, earning disappointment. Globally things have been stable, Middle East has been ignored, and nothing big in terms of a risk-off movement. So if globally things remain stable, I expect that lot of the impact analysis in terms of where Indian markets and individual stocks are going to head, I think that is not over. I mean, it was a Diwali weekend, you met a lot of folks, you spoke to a lot of folks, and that's what you always do. The sense which I've got is that, look, the bull market is not over, the earnings cycle is not over. We are only halfway mark in the earnings cycle, which means that equity markets have a long way to go. Now you could ask yourself is what will change? We'll talk about it, but you could ask yourself is that first identify what has gone wrong. Demand was wrong, earnings were wrong, government spending was wrong. Now you could ask yourself is that from here to March, what will improve? Could government spending come back? Could the base effect kick in? Could there be an impact which could start having back in rural demand? A lot of those factors will improve. So if globally nothing goes wrong this week, see if globally something really shakes up because of US election in China, then all bets are off. But if globally things are okay, and if US election and the Chinese stimulus package is something which does not stir the market or shake the market, then it's time to start doing treasure hunting in this market.